The UK budget avoids rocking the boat, but new economic forecasts create waves. Welcome to Macro Matters, your regular look at what's driving the global economy. I'm Peter Devlin. As UK Finance Minister Rachel Reeves wound up her key budget speech on Wednesday, bond traders did seem content, even after announcing the biggest tax increases in 3 decades. But within minutes, benchmark 10-year gilts had erased their rally, eclipsed by the Office for Budget's responsibilities and new projections. Britain's independent budget forecaster said that Reeves' plan would boost the world's sixth largest economy in the short run, but would raise inflation too. So, will economic realities and rising yields reign on the new government's budget parades? To help answer that and more, I'm joined by Sanjay Raja, Chief UK Economist at Deutsche Bank. Welcome, Sanjay. Thank you very much for joining us. So let's start with some pre-election Rachel Reeves comments. She promised the UK would outpace the rest of the G7 in terms of growth. But the OBR is failing to see growth surpassing 2% in its forecast horizon. So can this budget still be classed, is Reeves' words, a budget for growth?
It is sizable. It's big. Will it result in a big growth boost? It really depends, Peter, on how you define growth. And not to pull a page from the Chancellor's book in terms of redefining things, but if you're talking about sustained growth, if you believe the OBR's forecast, you may not see sustained GDP increases this part of the parliamentary period. Most of the effects really come through between 2030 and 2035. Now, of course, the big injection in terms of fiscal loosening over the next couple of years, where the bulk of that increase is coming through, will certainly lift GDP. Perhaps closer to 2% is what the OBR is expecting. We're a bit more pessimistic than that, but nevertheless, there will be a fiscal injection over the next 2 years. That suddenly and slowly fades away as some of those tax hikes starts to eat into potential growth, particularly one big tax measure that the Chancellor pushed forward, which was that NIC's increase, the employer national insurance contributions going up by £25 billion by the end of the decade. That's expected to hit prices, rather raise prices, hit employment, perhaps even hit wage growth in some sense.
Let's look at another horizon here. Reeves did pledge to lift borrowing by £142 billion over 5 years to help fund a massive programme of investment, as well as delivering another large jump in the minimum wage. So will this spending binge prompt stickier and higher inflation?
More spending, more fiscal injection, that should theoretically, all else equal, keep prices a little bit higher for longer. I think the scale and the magnitude is open for debate. We suspect maybe 10, 20 basis points in headline CPI. But the big question, of course, is not just what's happening on the fiscal front, it's what's happening on underlying services. It's what's happening with the economy beyond what we saw in yesterday's autumn budget. Of course, headline CPI here in the UK falling down to 1.7%, slowing down to 1.7%. We saw services inflation coming down to 4.9%. 60 basis points below the Bank of England's forecast. So there's much to be learned in terms of that momentum shift purely on domestic prices. So of course, this will act as some offset, but is it meaningful enough to shift the direction of the Bank of England? I think the jury's out on that. Certainly markets will be looking at what the Bank of England will tell us next Thursday, and that's going to be the kind of key pivotal moment for monetary policy going forward.
But let's look ahead to December, and investors did pare back their easing bets as well. Goldman Sachs now expecting a pause in December. Do you see that as a possibility?
The chances of a December rate cut, I think, certainly have come down. We are currently still expecting the Bank of England to deliver a rate cut, but a lot will depend on how they interpret, how they digest the autumn budget policy measures in the round.
So further warnings from the OBR as well. They highlighted that there's just about £10 billion worth of fiscal headroom, as tiny in historical terms. So is Britain in store for another round of tax increases, especially when you did highlight in your notes the potential ramifications of US foreign policy with the election next week?
So there's a lot of fiscal pressures coming on the domestic front, and as you rightly pointed out, there are going to be big questions on defense, what the potential implications could be from increased tariffs, depending on what the outcome of the next general election is in the US across the Atlantic. So these are going to have big implications for fiscal policy that haven't been addressed in this budget. So in many ways, this is a gamble. This is an injection into public services to fix public services. This is an injection into investment to push the UK out from the lower tiers of investment levels. But it needs to pay out, I think, in the next 10 years to really put the UK on a more sustainable footing when it comes to the public finances.
So finally, Sanjay, let's look at comments from PIMCO, one of the world's largest bond investors. They said they continue to favour UK government bonds after the budget. So is Britain's government bond market well placed to absorb the higher debt issuance needed to fund Reeves's plans?
So big question marks here, but overall, yes, demand in UK gilts for UK gilts is still pretty healthy. If you looked at the last indication of the DMO run, it was pretty healthy, about 25% demand coming from international investors. Gilt yields still look pretty attractive. These levels are still pretty attractive for a lot of investors. The question is, how will the Bank of England digest this, of course, and will Rachel Reeves come back to the gilt market asking for more money? I think there will be some consternation here in the budget or following the budget for investors, but it's a question that I think will need to be answered sooner rather than later.
Sanjay Raja of Deutsche Bank, many thanks for your thoughts. And that's Macro Matters. Don't forget, you can watch more videos on Reuters.com.